What is up, guys? Matt McKeever here with episode number 3 of our real estate roundtable. If you guys have missed the first couple episodes, I encourage you jump back and check it out. But the whole idea here is just bringing on a panel of different real estate investors with different levels of experience, chatting about some topical items of the day, as well as hitting upon any of your questions. So if you guys have questions for any of us, jump in the comment section now. And in the second half of the show, we'll try and get through and hit every single question that you throw in for us. But first, let's introduce some of our guests. So we've got Alfonso here first. Hey, Alfonso, how are you doing?
Second, let me just unmute. What's going on, Matt?
I'm doing well. Do you mind just giving a little introduction for everyone?
Okay, no worries. They call me the Godfather only because I've been around for a while. They should be calling me the grandfather of real estate. I've been around for a while. 27 plus years in real estate and business. I started during a recession back in the early 90s, 95, 96. And so I've been through a couple of these. So I'm excited. I got a multi-million-dollar portfolio across Canada, and I love sharing and helping people navigate through real estate, getting them to the other side.
Awesome. Well, I look forward to tapping in on your experience here. And next, we've got Mandy. Hey, Mandy, how are you doing?
I'm well, Matt. Thanks for having me here.
It's great to have you. And do you mind just giving a little introduction?
So I'm Mandy Branham, known as the joint venture queen. This will be my first recession as a full-time real estate investor. And my boring model seems to be pretty genius as we just keep churning. So I think this is a really good time for people to evaluate their portfolios, how they're raising capital, how they're structuring deals. And I thank you for putting together something like this for people to gather some phenomenal information from.
Yeah, I know people have a lot of questions. There's a lot of just general concerns and uncertainty these days in regards to the market. So I look forward to exploring all that with you guys. And next we've got Tim. Hey, Tim, how are you doing?
I'm great. Thanks, Matt. And how are you?
Doing well. And mind doing a little introduction?
Absolutely. So I'm Tim Felsky. I teach digital marketing at our college here in Sarnia. I've been a real estate investor / house hacker for 20 years now. But I'm probably the real estate bear on the panel, but I'm the Bitcoin bull. So a lot of people know me as Bitcoin Tim.
Yeah, absolutely. And I look forward to exploring some of that stuff as well. I'm definitely more and more trending towards Bitcoin maxi and really just not loving our fiat currency system. But we've also got Dave here. Dave, how are you doing?
Hey, how's it going, Matt? Can you hear me okay?
Yep, we can hear you.
Okay,
Everything's
awesome.
going well.
All right, perfect. I'm Dave Knight. Definitely not the Godfather here by any means, but just a full-time first responder and learning as I go along here, focusing more on residential, single family, all the way to 3-4 units, and now converting into the U.S., looking at more Airbnb, chasing that cash flow. So that's pretty much me in a nutshell. And learning as I go, because this is also my first, I would call it major recession. So always looking forward to hearing what other people are saying and learn from them as well.
Awesome. Well, appreciate having all you guys here. Again, if you guys are watching this live, jump in the comment section, hit us with any of your questions because we'd love to go through them. But I've got a couple stories I want to explore with you guys first. So I'm going to pull up the first one. This is courtesy of Blacklock's reporter. Bank expects mild recession. So a winter recession will not be severe. Bank of Canada Governor Tiff Macklem last night told the Senate Banking Committee. Macklem acknowledged his earlier forecasts were wrong. So you may remember Macklem from such things as interest rates will continue to stay low in 2021, as well as terms like, inflation's transitory. It's not a severe recession, said Macklem. It's not a major contraction, but you could certainly get a couple quarters of negative growth. Growth for the next 3 quarters is roughly 0, said Macklem, adding, I'm not going to give you a number because we take these decisions each time as we move forward. So I'd love to open it up to you guys and just get your thoughts in general. Do you think, are we entering a recession? Are you concerned about that? Is that changing your approach to real estate? And let's start off with Alfonso.
I think we are in I think what the mild recession he's talking about is what we're in right now. We're in a mild recession. Of course, there's a big supply chain issue, which obviously adds to the problem where you have interest rates going up. We're pushing against inflation. I think what they're going to realize, and this is just me, one person's opinion, and I'd love to hear what other people have to say. I think the lever they're using this time in terms of how they're going to manage this upcoming recession and how they're managing inflation, I think it's the wrong lever, right? They're using the interest rate lever, and ultimately, you continue to, you can bring up the interest rates to 20%. It's still not going to solve the supply chain issue, and so ultimately, we are in a recession. I think we're headed into something more severe than what he's talking about in terms of a mild recession. I think the next 10 to 12 months are going to be months of massive opportunity for people that are ready and have the insight to take action. And so those are my opinions.
And so how's that impacting your investing or your general strategy approach here, Alfonso, in regards to expecting a recession?
Well, I've always been a lean and clean type of person. I don't like, I'm not, we don't take on like crazy amounts of employees. We have the staff that we have. I think it's the staff that is lean enough that can, we can manage through these types of recessionary periods. I've been through multiple recessions, right? So we, I started in '96. And my first business, I was 17 years old when I started my first business. So don't want to get any ideas like I'm an old guy. But it was '96 when I started my first business at the end of a recession in the '90s. And people said the word recession, and thank God I didn't know the meaning of the word. It might have slowed me down because I went in guns blazing in my business. And by the time I was in my early 20s, that business was generating millions of dollars. We saw another correction, around the tech bubble bust, back in the early 2000s. And then again in 2008. And, during these times, I want to be prepared. I want to have cash available. I know what I'm doing. I want to move forward, and I'm not going to allow the governments or the news or whatever to, enter this real estate up here and stop me from what I'm doing. So I'm going to continue to purchase property. Obviously, I'm going to be more lean in the things that I'm doing in terms of interest rates. I mean, I think we're going to have that conversation later on, so I'll give my opinions on that. What I'm doing differently, I'm not doing much differently. I'm continuing to move forward. I've always been, like Mandy was saying, she says the boring part of real estate. I've always been a conservative guy. I'm not a big risk taker. I own hundreds of doors across North America, but all of those doors are cash flowing. They've been bought with real, clear real estate fundamentals. So, at the end of the day, there's nothing much different except that I'm going to take even more action.
Got it. And Mandy, what are your thoughts in regards to recession? Is there one looming? Is it going to be mild, severe? And how's that impacting your approach to real estate?
Matt, just super disclaimer, I'm not an economist. I'm not a market expert, when it comes to what kind of university degrees and backgrounds I have. So I utilize my on the ground expertise, what I'm seeing, what I'm hearing, whether I'm in a bank, a grocery store, like, a networking event. And what I'm seeing is that people are struggling. People are, it's like the basics are what everybody's talking about. You notice about gas prices. If you notice, groceries have gone up. Home insurance is starting to be effective. We've got a boat. We're at a marina. And somebody said, if interest rates change, we're going to lose our home. And if we don't lose our home, we're selling the boat to be able to. And it's those kind of comments from people that are kind of catching me off guard that I'm like, whoa, this is not just affecting, it's not just the middle class. It's like affecting everybody. And so I turn to, how do I create a basic human need? So as my business, nothing much has changed because, again, I do have a boring business. I produce housing. I'm not a crazy strategy that, is doing short-term rentals that I'm looking at people saying, if this is their paycheck and their paycheck's not changing, but everything around their paycheck is changing, what is going to be some of the first things that people are not going to be able to afford, or they're going to choose the pain of not being able to do? And so housing is one of those things. It's just a non-negotiable. They're going to have food and housing, and all the other things underneath are what people are going to now be choosing if they're able to do or not able to do. So yeah, they're going to be making big cuts. You've heard Gary Vaynerchuk this week. He's just been pounding on people to really be watching how they're spending their money. So I look at my strategy and I was like, okay, shoot, good. No speculation in there. No, this has to happen for this to happen, for this to happen, for my strategy to be a success. Back here going, if somebody needs a place to live and my business is offering it, does that mean things are good? So, on a thought of recession, I'm telling people to buckle up. I'm buckling up. I'm evaluating my portfolio with a buckle up approach, making sure that there are, like Alfonso said, those, cash reserves for our properties to be able to handle what's going to be coming at us. So that's kind of my boots on the ground thoughts on things right now.
Yeah, appreciate you sharing that perspective. Tim, what are your thoughts in regards to recession?
Oh, I certainly think we're in a what did he call it? A low grade
Severe or a mild, sorry. Yeah.
Mild recession. And I imagine it could get, a fair bit worse before it gets much better. If this inflation has been caused by excess demand and they've got to tamp out some of that excess demand by trying to squash this, this wealthiness that we all feel as, whether it be real estate investors or owners of any assets, this wealth effect, we've got to do something with it. Almost any desirable good is still scarce, whether it be Rolexes or Porsche 911s. So until factors of production can come online to help right that supply demand imbalance for some of the basic needs that people have, I don't know that the governments or central banks should be doing everything they can to fan the flames of the sort of financial excess that we've been seeing. So I think it could get reasonably worse, but I'm very confident in the end that whatever is happening is a short speed bump after 18 months, 36 months, or heaven forbid, 10 years from now. We're going to look back and laugh at being worried about this today.
Yeah, appreciate that perspective. And again, it often does come out to what is your time horizon, right?
Yeah.
When we're thinking about these things. Dave, what are your thoughts in regards to recession?
Well, like us all, we're kind of taking pace of it all, but we're definitely in a mild recession. How deep and how long is this going to go? I mean, no one has a crystal ball, but today I was watching Powell give his speech there at the Fed, raising the rates, and there's no sign of slowing down in the coming next 3 to 6 months, according to him. So at the end of the day, what does that mean? Could that change in the next meeting? Absolutely. But it all depends on the data from each quarter that's coming out. But for me, what am I doing? I'm trying to do what I've always done, which is just chase cash flow. So whatever that looks like, whether it means increasing units, changing from long-term to mid-term to short-term. So those are the kind of pivoting, deciding factors that I'm doing now. Is it always going to work in the same place? Maybe not. So I think focusing on more finding heavier discounted properties and raising the value versus, trying to find market value and everything, assuming everything's just going to go up and up. So I think between those two factors, that's what I'm focusing on. But it's definitely an uncertain time, how long this is going to go and how deep it's going to go. But I like to stay positive. And I heard one person always say it's only a recession if you think it is. And that guy was pretty high up. So if we all think it's going to be doom and gloom together, then it will be, because a lot of that comes from confidence and buying. And but obviously there's a lot of macro and micro factors there. But going through this, I'm just being more aware of my surroundings, whereas maybe 5-6 years ago, I probably wouldn't have been able to have this conversation. So I think like learning and growing and listening to key factors and economic factors. And, I would never sit and listen to the Fed have a meeting like I was this afternoon. many years ago. So just taking it by stride and just chasing cash flow at the end of the day. But how long is it going to go? No one knows, but I think dialing and being conservative on those numbers is more important than ever.
Yeah, and definitely appreciate your comments about consumer confidence, right? That actually can play in as a major factor in regards to how severe the recession is. If people get very spooked, if they think it's going to be extended, we'll naturally see purchasing and demands drop dramatically in regards to that. You also mentioned the U.S. Fed's rate hike today. And so that put them at 3.75, essentially on parity here with us in Canada as well with 3.75. I think there's an interesting conversation to have around, where do we think will Canada and the US continue in lockstep with raising rates, and what sort of consequences even to the Canada US dollar exchange rate? I think I saw someone jump in with a comment there on that. But before we go into that topic, I just love to explore with whoever wants to. What are your thoughts for rents? Obviously, we've seen rents skyrocket over the last, let's say during the pandemic, right? We've seen rent dramatically increase. I think the average new rent price right now is $2,000 a month across Canada is what's being shown in the newspapers. Do you guys think, is this sustainable? Do you think if inflation stays high that we'll see rents continue to inflate as well? Anyone that wants to jump in, just unmute. Alfonso.
It's simple as supply and demand, right? So if the governments were really serious about reducing the rents for its citizens, then they would give incentives for people to build. And that's an easy solution since we have so much land to build. Simple supply and demand, because at the end of the day, there's not enough supply. It comes down to that, right? And I think I just saw something in the news today, 500,000 new Canadians are expected to be here every single year, not to include the 800,000 Ukrainians. And there you go. That's exactly the article. I mean, where are all these people going to go? There's just no supply in terms of housing. And if we tripled the supply today, we still will not be on track to meet everyone's needs. And so ultimately, governments are going to have to give incentives to entrepreneurs, people like, everyone that's on this panel, to build more, because if you give incentives, then we will build. Plain and simple. We can solve this issue really quickly. And so if that doesn't happen, expect rents to go up and expect people for not to move and leave their units for a very long time. And so, right now it's a supply issue.
Got it. Mandy, what are your thoughts?
Yeah, coming right along. So in 2020, I had a 98% collection of all of my rents. Okay. 2021, I was down to 86% of my rents had been collected. So I'd had quite a bit of default in 2021. I could significantly tell when the government had stopped supplementing the rental rates and people were at that, do I go back to work? Hey, I've enjoyed my time off. Maybe I'll stay home. Maybe I'll change industries. Now's a good time. So I had a lot of tenants in flux in 2021. Now we significantly grew our portfolio, so there is some data to be able to say that I haven't necessarily had assets this consistently over these 2 years. But this year, right now, I'm at a 78% collection rate. Now you're going to say, Mandy, you're a shitty landlord. And I'm telling you, I've had more landlord-tenant board cases. I've had larger defaults. I've had longer wait times. And I'm not here bitching. I'm saying this because we kind of asked about rental rates. So I want to talk about rental rates. So if somebody's going to come in and they're going to create a unit and they're going to push top market rent, okay? I hope you do your screening to be able to get the tenant that can actually sustainably maintain the rental rate for the value that you're asking. Because my tenants, and I'm not somebody that has executive type units. I am like a solid rental grade, duplicatable, durable kind of units that I rent out. and my tenants are in default mode. So if we're trying to push rental rates, I get it. I mean, it is a supply and demand issue. Monitor which province you're doing this in. So I think it's just not something that we can put a blanket claim on. I want you to really monitor which province, landlord tenant board rules, which country, all this kind of stuff, just to be able to make sure that you're not going to find yourself in a spot where you've bought a property or you're refinancing a property based on this rental rate, and that rental rate's not sustainable, or it's just not going to be realistic as, you know, the recession and interest rates continue to change over the next little bit.
And just one quick follow-up question there, Mandy. So in this kind of market, would you be willing to charge a little bit less in order to maybe increase the quality of tenant, or your kind of percentage likelihood of collecting consistently from them?
So yes, so I would reduce my rent potentially to be able to secure a better tenant. But this is the other thing. I would leave it vacant longer until I found the right tenant. So it's if I've pushed the rental, and I have this exact example. So we were $1,500 for a 1-bedroom in Sudbury, Ontario. We had no parking. So the quality of people liked the units, but the quality of tenant that we needed for this unit all had cars, and we were out of parking spaces. So in order for me to continue to attract this kind of client, I needed one of these kind of clients that didn't have a car. And so I had to reduce the rents to be able to keep attracting that. But it has taken us 4-5 months that we've been looking for this tenant profile. Now, again, we're very patient. We have the ability to be able to say, you know, don't just put a shithead in here. Slow down, pick the right person. And if the right person's not coming around, that's when we evaluate what are we offering, what are we asking, you know, how can we, you know, have the tenant profile and what we're asking come together.
Got it. Alfonso?
Yeah, so, you know, I own assets in different provinces and states, and I think I'm in line with what Mandy's saying in terms of like check the government, see what's going on. I mean, Saskatchewan, I have lots of properties in Saskatchewan, and you know, Saskatchewan for the longest time has been, you know, hit with vacancies. I mean, the biggest issue there is like, you know, you want to keep good people for longer, and when you have a I guess 10% vacancy rate, you know, those rents aren't going up. You know, they're just not. You know, they go up here because in Ontario you have a supply chain issue. So I guess it's gonna be dependent on where those 500,000 people land, and you know, and obviously most people's you know, plan is to make their way to a major market. But if Canada can somehow figure out and, you know, deter people from coming to Ontario or, you know, some of these markets with very, very low vacancies, then I think it's not going to be so bad. So yeah, I'm in line with what Mandy's saying.
Got it. Dave or Tim, any thoughts on rent prices and where they're likely to go?
I'm just in the midst of filling a couple myself, and you know, it's amazing how much people, like you said, Mandy, you got to really screen your tenants, because you start looking at their income and they think that they can qualify for $1,750 for a single bedroom basement unit, which is crazy for me right now. But and I'm getting, my inbox is being full, and I'm being sent these individuals from real estate agents who say that they're qualified individuals. But when you start diving in, you realize that, you know, there's no room for error there. Like, so I think screening is, you know, obviously a big one, but it is going to continue to be pressed because of that demand. But I mean, there has to be a ceiling at some point, because people just can't afford. And again, people want to fill their buildings, and the last thing you want to be doing is filling your buildings with people who can't afford. And then, especially in Ontario with rent control and landlord and tenant board, you can get in some hot water pretty quick. So, you know, to answer your question, it definitely has some room up. That's why I like going a little bit more quality, because I can kind of push those rents up maybe a little bit higher than than most, but also attract people that are willing to settle for maybe a little bit smaller but nicer unit versus the alternative. So that's just kind of my strategy. But I mean, it all comes down to supply and demand, but I think there's definitely room for increased rent. I think it's already gone up like 20% I've read. So
yeah, it's been dramatic for the last couple of years, and right now it doesn't show any real signs of stopping. And I guess for myself, the one thing that I can't help but think back to, and this is obviously just anecdotal, one, because the stats aren't great when you're actually really trying to get into it, but I feel like based upon when I became a renter, like in the early 2000s into kind of like the 2010s when I became a landlord, I feel like rents were pretty stagnant during that period of time and weren't very dramatic. And then it felt like around, maybe I'm probably just very lucky, but right around the time I got in shortly afterwards, I would say like 2014, 2015, we started to see them really creep up, at least in my market. And then it seemed like it really just went on fire going into the late 2010s.
My first apartment, I paid $300 a month. You can't even get a storage unit for $300 a month.
Yeah, I don't think that will get you a parking space in Toronto either. There's a great question here that I'd like to field from the audience. So for someone trying to get the ball rolling in their real estate career during these times, what do you recommend? And I'd love to explore that with you guys. And right off the bat, I just want to share, I think that in times of uncertainty, that can create a huge opportunity. But at the same time, I like to take like strategic risks. And so I would want to really focus on keeping my personal cost of living down, because that, from my perspective, gives me the most degrees of freedom. So I'd be very tempted, if I was looking to break into real estate, to look at doing something like house hacking. So maybe let's start off with Tim. What are your thoughts right now? Is this a great time to be house hacking?
Oh, I mean, I think it's always a great time to be house hacking. I just had one comment on the last question about rental rates, which is that I think it's reasonable for real estate investors to earn a reasonable return on their investment in real estate and providing safe, affordable, clean housing for folks. And at current market prices, that's kind of hard to do if rents aren't continuing to march up a little bit. I think that there can be some equalizing force, but just, supply and demand is way out of whack. And these changes to provincial zoning both can't happen fast enough and will still be barely a drop in the bucket. But to your point on house hacking, for sure. My other comments would be that if you look at, I think the best way to break into real estate right now is if you can start to develop some skilled trades or even just some skilled labor, because that's a great way to ensure or bake in your own returns by doing much of the labor yourself. And yes, you're, buying yourself a job in terms of that approach, but some forced appreciation is really going to be helpful, and while keeping your costs low.
Yeah, that's a great point there on both fronts, Tim. And one thing this is just an observation that I've personally been having the last little bit here is it feels kind of weird, honestly, going into a recession with these high interest rates, and yet we're constantly hearing about labor shortages. And obviously that puts a lot of pressure on your cost, like your cost inputs as a real estate investor, particularly if you're focused on renovating and upgrading a property to its highest, most efficient use. So the idea of becoming handy and being able to execute on some of those renovations yourself, especially when you're first breaking in, I think is a great recommendation, Tim. Mandy, yeah.
I think house hacking is a phenomenal way to go about it. I want to remind people who are like, what are my first steps? That we all had first steps, and to be able to make sure that they're aiming at something that is affordable. We all, maybe I'm generalizing, moved into our first property, renovated our first property, rented out some of the bedrooms. I'm suggesting to people right now to buy with a fellow investor and both move in. Like, it's more about the qualifying that people are coming up with some difficulties. And I'm not a real estate agent, so, I don't see it all the time, but I just know that if I was trying to get in at the same time, I'd be looking for a $150,000 property. That doesn't work. So as interest rates go up, you need to be able to increase your income to continue to qualify. So how do you keep these numbers in check? bring in a qualifier, have mom and dad come on. Maybe mom and dad live in the basement, you live upstairs. Like, it's time to turn to some of these other very cultural norms of being able to share housing, co-house, and share expenses, things like that. You live with mom and dad, and there's a built-in babysitter. There you are. You said it, Matt. Reduce your expenses. Really get in check with what you need to do. Built-in babysitters, cook your own meals. Somebody said, you know what? I discovered this restaurant during COVID. It was called My Kitchen. I'd never been there before, but they're really good cooks. Yeah, because we need to start to turn to, ways that we can, make things more affordable. So buying duplexes, house hacking, but think about it coming from that space of sharing with others at a time that there's lots of other people that also need to get into the housing market.
Yeah, that's a great point. And honestly, even kind of circling back to Dave's comment about recession and how you choose to interpret it, I think when it comes to having roommates or, co-sharing housing, house hacking, whatever, a lot of it's honestly in how you frame it, right? If you decide it's a sacrifice to have a roommate or to live in one of your rental properties, it absolutely will be a sacrifice. But if you're willing to understand that this is really helping you build the financial foundation for your financial future, then this is a huge opportunity, in my opinion. Alfonso, I think I saw you on mute.
Yeah. So, I love the reducing of expenses, and I love the house hacking. I want to say that this opportunity is a small window of opportunity that we're going to see, mixed in with the housing crisis, supply and demand. I don't see this opportunity that we have right now. I don't see it lasting longer than 14 months. Even I would say is too long. I would say 10 to 12 months is what we really have here. And based on the question that that viewer was asking, what can I do right now? I think and this is what I did back in 2001, shortly after 9/11. Everything changed. The industry changed. My industry was hit. And so I had to make quick decisions because there was a small window of opportunity. And so, what I did, I got educated. I got educated on real estate. I got a mentor. I got a coach. I learned what to do quickly so I took massive action back in 2001, 2002. And the result was I was in this little window that propelled me forward. Of course, I reduced my cost of living. I try to, eat out less, but, ultimately right now is the opportunity. And so if you are wanting to take part of that opportunity, you have to educate yourself. You can't go out there and you can't watch the news and think that that's how you're going to get your education. You got to go to people and listen to people that have the results that you're looking for.
Yeah, I appreciate that perspective. And Dave, I know you talk to a lot of first responders, right? And if I'm not mistaken, you're often kind of a catalyst or really help them get started with real estate investing. So what sort of advice are you providing today to first responders looking to get into real estate investing?
Well, number one is educate yourself. So education, get a mentor. I mean, that's how I started. But also, I always ask, and I would even ask myself the same question even now is like, what do you want from real estate? Like, it can be a marathon or it can be, a sprint, and if Alfonso got in and he hammered it quickly and he probably knew exactly what he wanted, he had, his understanding of why he was doing maybe a purpose at that time. Whereas not everyone is necessarily going to want to make real estate their career. Right. But I think it's an important time right now to make sure you don't make those stupid mistakes. And I think getting educated, finding a mentor, and, shortening that learning curve is definitely number one. Looking at the history, like learning from history. And again, a lot of that comes from a mentor or someone with experiences who have been through these cycles and can kind of share that experience with you. But yeah, it comes down to how much you want to sacrifice or get ahead. I like thinking about getting ahead versus sacrificing. And, house hacking, like you mentioned, man, like I did that for several years. Even when I got on the police force, I always had someone that I was working with rent out the other room, and I didn't realize how sweet that was at the time because I had so much, play money, but prices were a little cheaper then too. But it's just one of those opportunities where you got to figure out what is it that you want in real estate, and don't necessarily think you got to, turn into an Alfonso tomorrow. It's a slow and steady race, and that's kind of the way I approach it. But at the end of the day, you got to be conservative on your numbers and figure out what direction you want to go. And sometimes you don't even know what direction you want to go because you don't even know what exists. And then so I think part of that learning curve is figure out what direction you want to go.
Yeah, that's a big part of the education process, honestly, is just learning those unknown unknowns, right? A lot of people go into real estate or get involved in real estate investing thinking that there's a one size fits all solution, but it really does come down to, as you were saying, Dave, what is your underlying motivations, right? Is your goal to reach financial freedom through semi-passive income? Is the goal to be able to buy that cottage or to be able to buy a second home in Florida or whatever? Because the type of strategy you're going to want to implement in order to get you there is going to be drastically different depending upon what your individual priorities are. So that is really important. I encourage anyone that has never spent any time doing this. There's a great program from Dean Graziosi called 7 Levels Deep Why. And essentially, it's all about just asking yourself why, literally 7 times. I think he originally stole it from Joe Stump, but it doesn't really matter who came up with it. But this idea of just asking yourself that question again and again until you get to what I kind of consider like an emotional core, that's absolutely so powerful, because in these times of uncertainty right now, if you're trying to get into real estate investing and that's the way you approach it, it's going to be really easy for doubters or friends and family that maybe have good intentions but not good advice to, steer you in the opposite or wrong direction from where you actually want to go. So I think making sure that you've got a strong conviction behind why you want to get into real estate investing, figuring out that strategy, and then focusing on educating yourself to the best of your ability, and understand you are the average of the 5 people you spend the most time with, right? So if you surround yourself, whether that's with mentors or peers, even having mentees can also be valuable. But if you're brand new, probably don't take on any mentees. But understanding that this is a process where you can learn through osmosis by just surrounding yourself with like-minded individuals. There was a couple other questions here I wanted to hit. So we had Default Name jump in. What are your opinions on doing flips and burrs during these times? I'd love to explore that, because I know a lot of people are getting very nervous now about refinances. And some people that had longer term burrs or longer term flips maybe aren't seeing the appraisals come in or the buyers come in at the price point they wanted. So how would you guys go about approaching these strategies? Or do you think these strategies should be approached right now in this market?
I'll take that one.
Yeah.
If you don't mind. Only because that's exactly what I was doing. I was focusing on flips. I was doing actually multifamily conversion flips. And I mean, you got cost of materials going up. You have appraisals getting, tightening. You have lending tightening in general. So people wanting to purchase at a certain level can't even afford, or the bank won't lend. Things are changing quickly, where sometimes these projects, for what I was doing anyway, was 12-month projects. So a lot can happen in a year, or 10 months or 12 or 14 months. One of my projects was about 16, 18 months versus a 12-month, because we were waiting for a permit during COVID for 7 months. So it was just one of those things where you gotta hedge your risk somehow. And so now I'm just, I'm able to, whether taking on partners and refinancing, holding onto the property, or just focusing on just holding and, doing that kind of thing for cash flow. But flipping is not what I'm focusing on right now. And that's just me. I know a couple people that are still doing it, but everyone that I know who are flippers are extra cautious. And even like some big time flippers down in the US that I've spoken to on my podcast are dialing that down big time. So it's just something to be aware of. And especially if you don't have a lot of experience, it can be a rabbit hole for you. And that's the last thing you want to see yourself get into.
Yeah, absolutely. Alfonso, what are your thoughts?
I know this is a strategy that a lot of people, want to apply. Obviously, it can be a strategy where you can raise a lot of capital. I got stuck with a few flips back in 2008, even though the market didn't crash. The properties that I was working on didn't sell as fast as I thought or as I was hoping, and ultimately I ended up breaking even. So it wasn't so bad. But I've always told people, listen, any strategy that you're going to apply in real estate, you need to think about this. What is your worst case scenario? And if you cannot deal with the worst case scenario, it's probably not a strategy that you should be moving forward with. And so if you are going to be doing flips, if you are going to be burning properties, and you're looking at these deals, you're analyzing these deals, and you ask yourself, hey, what's the worst case scenario here? Well, the property doesn't sell, for example. That could be a worst case scenario. And I have to hold it, but the rent won't cover, and it's going to be devastating to my family. Well, don't do it, right? Plain and simple. If you cannot deal with the worst case scenario, this is not the time to be taking that kind of risk.
Yeah, certainly having multiple pivots available with your strategy as well, I think is absolutely key in order to navigate uncertain times. Mandy. Oh, you seem to be muted. Oh, like we can't hear you, but you're not muted here. Yeah, we're still not, I'm not sure what happened. Oh, and now you're muted in a different way. Let's try this. Oh,
there we go. Can you hear me now?
We got you.
You know what? I remind people, Matt, that we are now November the 2nd of 2022. And a lot of times, when people are saying, should I be flipping? Please remind yourself of the date of the time of the exact market that we're in, the time of our world kind of thing, because people will talk about the success of flips and you're like, yeah, that was 2017, or they'll talk about the success of a flip and you're like, yeah, that was 2020. And I'm not denying their successes, but I really want people just to be reminded of exactly where we are. So when they're taking in and they're doing learning, just kind of have that little bit of air of, yes, but where was that in a market cycle? Will that work in my exact market cycle? And I think having the strategy of being able to, if I can sell this for X amount of dollars, fine. And then like Alfonso said, what's the next case? I keep it. Can I keep this asset? Will it work as a long-term buy and hold? I had a large property. I had the bank on the phone before the offer was submitted with a yes. So I think because we can take time in the market right now, I want people to just understand there's no rush. You don't have to do conditionless offers. So take some time, take a breath. There's not 15 other investors lined up competing for the same property. So really do some good due diligence, calling your lenders, making sure, asking your realtor for that after repair value or that potential sale price. Nobody has a crystal ball, but just really ask, an extra 1,000 questions before you get into something.
Yeah, that seems like very reasonable advice in our current market conditions. And I think for anyone that still does want to move forward with flipping, understand that I don't view flipping as just like this omni strategy. It's actually, there's segments within it, right? And so for me personally, I'd be far more attracted to starter homes, beginner homes, duplex conversions or properties with that income suite versus chasing after high-end single family houses at this point in the market. Again, no one's got a crystal ball here, so we're not going to be able to guarantee you anything, but I'd feel much safer as an investor focusing on starter homes, lower price points in general. And certainly I don't think now is the time to get caught up in bidding wars. So if you're finding that in regards to the market, I would be in a cooling off period.
Some
Alfonso.
some people became investors in 2020, and so they haven't seen downturns. They don't even know what 2019 looked like as a real estate investor. Like a lot of the habits that we have built, they have come as a result of something that it was completely wonky. Like having 133 offers on a property was not normal at any time. I've been in real estate for more than 20 years. Never has that been a thing. And so if you are one of those people that, are used to that and you get emotionally attached, I would say spend more time watching this channel and make sure that you're educated on what happens during these market cycles, because you can make money during any market cycle. You just have to change the strategy.
Mm-hmm. Absolutely agree with that. And so Jeff Shiner had an interesting question here I want to explore with you guys. Thoughts on the strengthening USD is going to affect housing and the cost of new builds or renos. And so I think there's actually a lot to unpack there, but that actually fits within a couple things that I was planning on sharing with you guys anyway. So let's pull up the screen share and just a quick breakdown here right now for anyone that's not actively finger on the pulse. We're at like 73 cents on the US dollar here in Canada. Obviously, that's a dramatic drop from where we were, bumping up against 80 and even low 80s into the mid 80s in 2020, like May 2021. So it is something that I've personally been thinking a lot about as well, not just in regards to where we are today, but what happens in the future if we all of a sudden saw the US Fed and Bank of Canada no longer kind of marching in step with each other in regards to interest rate hikes. Right now, it's really hard to tell what's going to happen in the future, but I'd love to hear your guys' thoughts, not only on maybe the future of the USD Canadian exchange, but also where do you see interest rates going? And obviously, again, we don't have a crystal ball, but when and where do you think it's going to peak in regards to interest rates from the Bank of Canada? Who's feeling brave? Alfonso.
I'll talk about that. I think we'll see 10%.
10%.
Yeah, I think we'll see 10%. It's not out of this world. I mean, that's in line with when I started investing.
Mm-hmm.
You know, my first mortgage was at 9.7%. That was my first mortgage that I ever got back in 2000 and I think it was 2001. And you know, the guy that was giving me the mortgage was like, whoa, I can't believe we got this rate, you know? And so I think ultimately the same thing they did with gas prices, right? Like they had us anchored at like $2.60, and then now they're at $1.80, and we're like, okay, that's cheap, right? So we get anchored to certain things as human beings. So I think interest rates are going to continue to go up because they're using the wrong lever. Again, they're using this lever of interest rates where that's not going to impact the inflation at all. In terms of the US dollar, well, I also lived during a time where, you know, the US dollar, the Canadian dollar was higher than the US dollar. And I saw the impacts of that, you know. And what I love about our Canadian dollar being lower than the US dollar is that it's going to invite more people to come invest here. Maybe builders will come here. Maybe that's going to be an incentive for them. And I think there's a lot of benefits to having the US dollar being stronger than the Canadian dollar. Ultimately, as interest rates start to go through the roof, I think that the U.S. is going to experience our harsher recession since they're a market that is 10 times bigger than ours, and so I think at some point you'll see that U.S. dollar come back down, and if not even what happened back in 2002, 2003, where the Canadian dollar was higher than the U.S. dollar.
Interesting. Yeah, appreciate you sharing your thoughts there. And as far as timeline, if we were to go all the way to 10%, what sort of time period are you thinking?
I'm thinking early, if not late 2023, but early 2024 for sure.
Got it. All right. Well, I'd love to hear everyone else's thoughts on interest rates.
We'll come back and watch this.
And again, obviously, no one's got a crystal ball here.
No one has a crystal ball. You know,
I do appreciate people sharing their thoughts and opinions, though, because if nothing else, it's always food for thought, right? I always appreciate having a couple more data points when it comes to these things. All right. Does someone else want to jump in here? Mandy?
Well, I want to address can we talk about another question that came on?
Yeah, let's just quickly hit interest rates first, because that's something that I literally get DMs about way too often. So I'd love to cover those, but
I honestly am not an interest rate monitor. I like to make sure that the terms of the mortgage are really advantageous for me. Can I do easy refinances without crazy costs? Can this mortgage add on to the next one? And if an interest rate is something that is going to not allow me or allow me, higher interest rate, lower interest rate kind of thing, variable versus fixed, right? That's a good question right now. But, as an investor, I'm always making sure that I can refinance easily and add more mortgages on. So those, I don't ask the interest rate question. I honestly tell my, many investors, don't play the interest rate game. If you are concerned about that you're not going to be able to keep up as interest rates change, stress test a pro forma at 10%, like Alfonso's describing. And if you can't handle 10%, well, then I'm not saying that I want you to go to doomsday and think that it's going to go to 10. But if it creeps up in the 6 and 7 and you start to go into that negative cash flow, like you said, and then life, essentials become, oh no, am I going to be able to pay for my negative cash flow or put food on my table? Then obviously you shouldn't be going into a thing. So be mindful, but this it's a question that is meant to scare the masses. And people on this channel, Matt, we're always making sure that we're elevating ourselves and not getting caught up too much in that kind of stuff.
Yeah, appreciate those insights. Does anyone else want to talk on interest rates? Otherwise, we'll jump over to Mandy's other question. Yeah, Dave.
I think, again, it comes down to chasing cash flow. So if your deal's not making sense now, you can't anticipate rates going down. So you always have to anticipate them going up. So you got to be conservative in all your numbers, especially now. But as far as like the US is concerned, again, the Feds, I mean, we're following the Fed just like the rest of the world pretty much does. They're chasing for 2% inflation. So they still have a ways to go. And they even said that there's no slowing down. So are rates going to continue? Absolutely. I mean, in my perspective, from what I've heard and seen. So a part of that is, one thing I do like about the US versus, well, there's a lot of things I like about the US better, but the one is the ability to lock in rates. So you can lock in a 30-year mortgage down there versus here you only have maybe 5 years. And if it does dip down, the penalties can be quite severe if you're locking in for 5-year, fixed rate. So those type of things are obviously nerve-wracking, which is why I like the US. Sometimes you can kind of be a little bit more secure in those longer terms. And then 2, as far as the exchange rate is, no one really has a crystal ball, but the way I look at it is the long term, you might be taking a hit. Now I'm talking exchanging from Canada to the US, taking a hit on that down payment or that initial down payment. But again, you're also getting received funds in the US, which is also that exchange. So unless it spikes up real quick and sharp, I mean, that's obviously a possibility. But for the long run, you just can't sit still and, just wait, because otherwise you'll just never get anywhere. So that's kind of my 2 cents. It's 2% inflation, and I think we still got a ways to go. So,
yeah, appreciate that, Alfonso. And then I think I saw Tim unmute.
Yeah. So, one of the biggest questions when it comes to interest rates right now, what's on everyone's mind is variable versus fixed. And I get this question all the time. People know that I have real estate, and they're like, Alfonso, like, what are you doing? Like, are you fixing? Are you variable? And I think that's an individual question. Everyone needs to ask themselves, like, okay, what's my bottom line here? If I have for example, I'm getting a mortgage right now, $10 million. All right. And if 1 or 2 points, if there's movement 1 or 2 points, I'm not going to be happy, and so I'm going to fix that. I cannot deal with the worst case scenario versus another mortgage that I'm getting, 800,000 or 900,000. Well, if it went up to 12%, I would still be good, right? So I can deal with that worst case scenario. So when it comes to whether it's fixed or variable, I think that's an individual question, and everyone should, take inventory of their portfolio and figure what's the bottom line here. Like, what's my worst case scenario, and can I protect myself in case no one has a crystal ball, but in case the interest rates go up to 10%, we're doing what we've always done. Everyone says variable, because variable have outperformed fixed for the longest time. Yes, when the interest rates were 20%, variable always outperformed fixed because interest rates were on their way down. We hit the very bottom, and so now interest rates are going to come all the way up. We don't know what that number is, what the ceiling is, but ultimately, everyone that's watching this right now needs to sit down and be realistic with yourself. Ask yourself that question. What is my bottom line here? Like, what is the point of no return? And so if you can deal with that, perfect. Variable might be the way to go. If you cannot, then fix is the way to go. At least you can sleep at night.
Yeah, appreciate that. And Tim, what are your thoughts in regards to interest rates?
I do think that this cruise ship is not yet slowing down, never mind turning around. So I'm just hoping that the name isn't the Titanic and that we can preserve some notion of a soft landing or maintain a political environment that is conducive to moving forward, because I think it has to get pretty bad for certain people for anything to change right now. Like, real estate investors don't look nearly scared enough of the rate potential. And that gives me some worry that we're not nearly turned around, never mind at the bottom yet.
Yeah, it's certainly unique times. I guess for myself, it feels very difficult to try and predict the future of interest rates at this moment in time, because I think it probably is the medicine that we need to a certain extent. And I suspect that higher interest rates are a reasonable prescription for us to take. At the same time, with what we saw in the UK with Liz Truss and kind of her trying to pass certain austerity measures, and then essentially the bond market going wild and forcing a active prime minister of the UK to, in essence, be forced to step down. That was unique, I think, in our timeline. And so I personally think that we could find ourselves in some really weird financial macro situations. Like, it doesn't seem outside of the realm of possibility that we could literally experience quantitative easing while also seeing interest rates rise, or the inverse of like quantitative tightening while interest rates take a pause or a slight dip. I think that at some point in time, we'll see them start to play with other levers, as kind of Alfonso has alluded to previously. But let's jump over. Mandy, what question caught your eye?
The Hungarian experiment, thoughts on infill developments or rezoning. There we go.
Awesome.
Yeah.
So what are your thoughts?
Well, so right now, I think I go with the easiest method where there is already a lot of green lights on my way. So I know if you pull up that, Premier Ford announced that there's going to be some creation of third units, which, if they're going to somewhat rubber stamp this, create this to be a very duplicatable model for investors or, for people in general, homeowners. But speaking to, with our investor hats on here, I think that that's going to be a really great way for you to be able to look at your portfolio, add that third unit. Yes, it's going to cost you some money. I do want you to ask some questions. So, along the lines of development, I think it's really going to be important to have conversations with your lenders. Like, what does exit financing look like for this project when I'm done? And, whether that be you want to do an infill and sell it, or you're going to do it and exit refinance, asking the questions about how am I going to finance this project? Same thing with third units. A lot of lenders, please make it known, a lot of lenders do not like a large detached unit and trying to finance it. So really want people to make sure that they're saying they're not building this, monstrosity of a development and then not having the ability to exit finance or not knowing the exit buyer for it. So really just, addressing some of those issues. But I think infill and development is a great space to be in.
Yeah, appreciate those thoughts and insights. Does anyone else have any thoughts, particularly around what Doug Ford announced in regards to essentially allowing up to 3 units in single family zoning? Because I guess my general thoughts are I understand why that's being greenlit. I personally think that some investors are maybe underestimating NIMBYism, though. I do think that we'll see a lot of pushback in unique and weird ways on a long enough time horizon. If this holds, I wouldn't be surprised to see a lot of higher end properties eventually moving more to like strata or condo type things, where essentially like that way they're able to enforce different rules that won't allow them in order to have those 3 units. But it certainly, for at least a period of time, I think it could be a really interesting window of opportunity. Dave, I think I saw you unmute.
Yeah, I never really thought about that side of things. I think that's an interesting conversation, actually. Kind of the higher end thought of it, converting or turning new builds into 3 or 4 units. But as far as my mind goes to Hamilton, because that's where my majority is of my stuff is, I haven't sat down and actually, I know there's been a couple webinars out now with some of the architects have come out with, but I haven't watched those yet. However, at the end of the day, I'm very hesitant. It's, they always promise or have great expectations or, these ideas, but yet when it comes down to push and shove, it's like, yes, maybe you can get three units in here now legally, but what's the new code? And then now you're going to have these limitations on square footage, ceiling height, minor variances that you're going to have to deal with. So I don't know what that process is going to look like, but I think we're very overly optimistic as investors. Sometimes when we hear like one little bit of news, we all just get all excited. It's like dropping the little bit of food and a bunch of seagulls. We all get excited, but we got to kind of take it slow and realize and kind of ask ourselves, what is the steps and the procedures to actually make all this happen? Because like you said, it sounds great, but I wonder where the limitations are actually going to be.
Because again, I think there is going to be a large factor. Like, I think your average subdivision, you're going to see a lot of pushback from individuals, right? And I can think to, we've covered in the past in regards to Barrie, right? And the idea of additional dwelling units and things like that. And the sorts of crazy stories that I've heard from individuals that focus on that niche, right? There's a lot of NIMBYism there. Again, I think that for strategic investors, though, this could be a fascinating niche to try and carve out. I probably would want to just kind of see how things play out a little bit more before jumping in blindly to it, because another little thing that I shared in a Discord discussion on the subject matter was the idea that you could start to see cities going after landlords more because of this, right? Like we could see more jurisdictions or municipalities moving towards landlord licensing and maybe even like prohibitive fees in order to try and disincentivize individuals from adding additional dwelling units to single family homes. But does anyone else have anything on this that they'd like to jump in on?
Well, I'm just waiting for for all the incentives for us to build apartment buildings. That's what we want. 3 units, it's not going to solve anything. I mean, I'm happy for everyone, but I want more incentives on apartment buildings. I mean, there's a lot of land in Canada and Ontario, and make it easier for investors to build apartment buildings. That's where I'm at. Whoever says that, it's got my vote.
Got it. Well, I think we're going to wrap up here soon, but I'd love to just end with one little question, and hopefully you guys will indulge me on this. Tim, what's your general thoughts on everything Bitcoin related right now? What are you doing? Are you just stacking sats?
Yeah, just stacking sats. It's very straightforward. It's super simple. It doesn't call you in the night. There's no toilets to replace. It's the tax structure is laid out. You can take it with you when you go. It's really fantastic. I mean, my capital is pretty much fully deployed and has been for the last 2 years since like the start of COVID. So it's been pretty just, hurry up and wait sort of situation as we've entered a pretty steep bear market, but of course, nothing that we haven't seen with Bitcoin before.
Yeah. And any advice for people that maybe want to spend some time learning about this? What sort of resources, audiobooks, or podcasts would you recommend?
I think it depends where you're coming from. If you have no understanding at all of money in the financial system to begin with, and a lot of these interest rates and dollar conversations are a bit foreign, or the idea of fiat money doesn't make any sense, I would definitely start with, excuse me, the Hidden Secrets of Money series from Mike Maloney. He is a gold salesman, and I won't hold that against him, but his facts and his history are easy enough to digest to kind of really get a handle on what money is. Because if we don't start from trying to understand Bitcoin from a monetary perspective, I think a lot of the lessons are lost. After that, Andreas Antonopoulos. Andreas Antonopoulos is the guy, the number one Bitcoin educator to get folks started.
Excellent. Yeah, appreciate those recommendations. And as well, for people that just love cranking out audiobooks, I'll encourage the Bitcoin Standard. I had my team all read it last year. And I think, again, it's a great introduction, not only to the concept of Bitcoin, but the concept of like money in general, right? And understanding the historical context of money and understanding the current context of fiat currency. So again, really appreciate everyone joining us for this episode of the Real Estate Roundtable. I hope you guys enjoyed it. If you did, smash that like button, hit subscribe. I see Mike Rosehart's in the comments as well. Appreciate those of you that jumped over from Mike's YouTube channel. But before we go, just love to hear a few parting thoughts. And if you guys have any call to actions or let people know where they can find you, we'll start with Alfonso.
Anybody can Google me, go on my YouTube channel, subscribe. I love to share whatever I can with people to get people to the next level. I've been doing this for 20 plus years, and this was fun. This was ultimately anybody with any type of insight and already with experience in real estate are the best people to show you the way. And so people on this panel, I mean, this is a better panel, better time spent than watching CTV News or CBC or whatever kind of news. Listen to the people that have the results that you're looking for. Thanks.
Appreciate that. Mandy.
I think I want to, I'll end with saying, you know what, it sounds like a long time when you say the word decade, but right now I think that is a very interesting term and timeline for you to kind of be able to say, we are looking to create patient returns. Have some patience. If you're in a rush right now, might not be a great start, or we're just anytime that you're kind of out of balance with how fast you want your returns, you sometimes lose sight of some of the key economic drivers that need to be in your mind. So interestingly enough, I am listening to right now The Creature from Jekyll Island.
That's a great book.
Right. Just such an oldie, but talk about bare fundamentals. I mean, I think we just keep a real mind in an economy like this. Ask yourself, does this, say yes for my internal compass? And if it's an investment, if it's, a decision you're making about the outcome of your life, just make sure that it meets with your internal compass in times like we're in.
Awesome. Well, reading books like that, you might become a Bitcoiner very soon, Mandy. So I love it.
I know.
And where can people find you?
Bitcoin, I'll accept Bitcoin, cash, US dollar, and even chickens, whatever. Pay your rent.
Yeah, you're right. I'm Mandy Branham, J_V_Queen on Instagram. I'd love 100 new followers. And on my YouTube is JV Queen Mandy Branham.
Awesome. Thanks, Mandy. Dave?
Sorry, had to find the unmute button there. Yeah, you can find me on Instagram, Dave Niter, or if you're into podcasts, First Responders Wealth Network. It's kind of geared towards my first responder community. However, at the end of the day, an investor is an investor, and I've been, super fortunate to have a lot of great people on there, including Alfonso. Actually, just a couple of weeks ago, just came on. So, but my 2 cents, just depending on where you are, just get educated, kind of look several steps ahead, not just the next step ahead. I think especially in these times, just be conservative and talk to people who have been, in the shoes of where you want to be. I think is really, really important.
Yeah, absolutely. Tim?
Thanks, everybody. You can find me everywhere on social media at Tim Felsky, Twitter, Instagram, YouTube, and so on. And you can hear more of Matt and I's Bitcoin and cryptocurrency ramblings on Matt's series from last summer and from the, was it BTC SOS? Sats or Swim?
Yes. Stack or Sink. Yeah.
Stack or Sink.
Bitcoin Takeover Canada, Stack or Sink. That was
Save
actually
our
one of the
souls.
things I'm very proud of content that we created. So glad you brought that up, Tim.
For sure. Thanks, everybody.
Awesome. Well, thanks everyone for watching this episode. Really appreciate you guys joining us. Reminder, we're doing this every single Wednesday at 8 p.m. Eastern Standard Time. Love it when you guys jump in the comments, give us your thoughts, your opinions, as well as hit us up with questions. We'll be back next week. I'm always looking for new panelists, so just hit me up on Instagram. It's Matt McKeever85. It's right there. So again, hit me up if you guys want to join. There's really no requirements other than the fact that you're willing to have open and honest discussions about real estate investing, macroeconomic factors, and, taking things from the Canadian real estate investor perspective. So again, appreciate you guys hanging out with me. We'll wrap up here, and I will be back next week.
Thank you for watching. Don't forget to comment down below, subscribe, hit the bell to be notified the next time we're doing a video. And guess what? Like, share, dislike, I don't care! Let me see how that looks.